Hello, this is John Smallwood from Smallwood Wealth Management.
Today we're going to be talking about what is life insurance. Life insurance is probably one of the most understood assets that we have in the financial planning process. As I've been doing this for quite some time, it's also filled with a lot of emotion because it's typically something that we're dealing with in the future that is hopefully we're not there when it occurs. And it's hard to understand that and what's going on. But simply put, life insurance is a contract between an insured and an insurance company that will deliver a certain sum of money or capital in the future when the insured dies in exchange for a premium or a payment, if you want to put it in those terms. So it's simply a contract that promises to deliver a certain amount of money as long as the policy is in force. With life insurance, it can be delivered to the beneficiaries in numerous ways, which are called settlement options. And the settlement options are very often misunderstood, but in essence, you could receive a lump sum check. You could hold the money with the insurance company at interest. You can get that money delivered over a time frame, say 5 or 10 or 15 years. Or you can exchange it for a lifetime income. And there's a couple other settlement options, but basically the fundamental basis of the life insurance is to protect your most important asset. When you start thinking about your most important assets, your car, your homeowner's insurance, your house, your business, these are all assets, but they've all been created by you. You are your most important asset. You're the one that creates the income, your spouse, your kids, your parents, your business partners, the individuals, the human beings are what we're insuring here. And when you think about insuring your car, your house, your boat, your disability insurance, long-term care, major medical insurance, tire insurance on your car, a warranty insurance, these are all things that we're spending money on, hoping that they don't occur, but if they occur, there's going to be a big expense, okay? When you start to think about those, disability, homeowners, car insurance, jet ski insurance, all those things, we're hoping that they're not going to happen. And there's a possible or probable possible outcome that none of them actually happen during our lifetime. Life insurance is really the only financial insurance that is insuring something that is going to happen. Death is going to occur. The question is, we don't know the time, date, or location. We don't know the economic circumstances, and we don't know the economic impact that will be put upon. We don't know the sequence. We don't know any of these things, okay? You are the most important asset. Now, if you stop and think about your current financial situation, your income, your pension sources, your retirement income sources, your current liabilities such as mortgages and credit cards and current taxes, your future liabilities such as promises to pay for college and bar mitzvahs and bat mitzvahs and sweet 16s and cars, all kinds of things like that, future inheritance tax issues. These are all liabilities that are going to change, and the life insurance helps endow or cover these things so that in the event that premature death occurs, you're going to have income replaced to the family, or pay for inheritance tax, or pay off mortgages and debts, or provide money to put kids through college. It's a replacement of those assets. The goal for the entire time of the financial planning process is to have maximum coverage for your entire life that is owned in the most efficient manner that allows you to maximize your wealth potential, enjoy your wealth, and pass your wealth to your favorite heirs. Hopefully not taxes, but your favorite heirs. When you're looking at this, what we're trying to achieve with the economic value is that if I owned a house that's worth $500,000, I can't insure it for $2 million or $3 million. I can only insure it for its replacement value. When it comes to economic value, what we're talking about in the area of life insurance is that the economic value is the value of an asset deriving from its ability to generate income. That's from investorwords.com, okay? But that's a pretty interesting concept. But the idea is that if it produces income, it has value. If I owned a rental property that was producing $100,000 a year of income, how much would I insure it for? I would insure it so that I can rebuild the building to generate that $100,000 a year of income. I'm not going to insure it for $100,000 or $200,000 or $300,000. I'm going to look at it as what does it cost me to build that, which it might be $2 million as opposed to $500,000. So that's really, really important part of what we're doing, and we're talking about the economic value. When it comes to your options, you have term, you have whole life, you have universal life, index universal life, variable life, second to die, first to die, which insures multiple people but pays off either on the second death or the first death. And there's many uses for life insurance, which we'll get into. What I wanted to do here today was simply get you to start thinking strategically and how important this life insurance is during the different phases of your wealth plan. Thank you. Talk to you soon.
Welcome to the end of the video. Smallwood Wealth Management is an investment advisor representative. The opinions expressed by Smallwood Wealth Management and guests on this show are their own. All statements and opinions expressed are based upon information considered reliable, although it should not be relied upon as such. Any statements or opinions are subject to change without notice. Information presented for this educational purposes only. Moreover, no listener should assume that any discussions or information presented serves as a receipt of or substitute for personalized advice from Smallwood Wealth Management or from any other investment professional and is not intended as an offer of solicitation for the sale or purchase of any specific securities, investments, or investment strategies. Smallwood Wealth Management is not a law firm or an accounting firm, and no portion of this presentation should be interpreted as legal, accounting, or tax advice. Information expressed does not take into account your specific situation or objectives and is not intended as a recommendations appropriate for any individual. Listeners are encouraged to seek advice from a qualified tax, legal, or investment advisor to determine whether any information presented may be suitable for their specific situation. Thank you for listening.